Just like every other mortgage company, we do offer your normal conventional programs such as conventional, VA, FHA, jumbo, right? All this stuff. For conventional, we go down to 620, FHA 580, VA also 580. Those are our in-house products. Now, anything that doesn't fit our in-house bucket, we do have the ability to broker it out. So for FHA, technically, you do not need a score. So there are some of our brokered out partners that will allow FHA manual underwrite, even with no scores, right? Typically, you got to have at least probably 10% down. They're looking for compensating factors. So if you have a scenario, bring it our way. We can take a look. Worst thing, they just can't get a loan. All right, I just made a little PowerPoint for us. So for those of you that don't know who I am, who we are, I'm a branch manager at Paramount Residential Mortgage Group. A little bit about me. I've been in the mortgage industry now for over 2 years. Also, thank you for your time. Thanks for having me. But so if you've never heard of PRMG, we are a privately held mortgage company. So we're not public. We started in 2001. So we did go through the crash and we're still here. We are licensed in all 48 states. So if you have any clients or friends or family that's looking to buy or sell, refinance, we are licensed in all 48 states. We do have branches, 230 branches nationwide. We are actually one of the top 25 mortgage companies in the nation. FHA government loans are a big part of our product mix. So that's a little bit about us. All right, so why PRMG, right? We do offer fast pre-approvals, typically same day to 24 hours. I myself, I also, I don't work your normal hours, 9 to 5. If it is after hours, I'll still pick up. So a lot of times you guys are working on the weekends. So am I understand that, right? We work hand in hand. We're pretty much partners, essentially. Communication, like I said, I'm pretty accessible. So you call me, text me, I'll be there to help you out. We also have the latest technologies, and I'll show you some of that stuff later. Do you guys have a CRM system by chance? Do you guys use a CRM to keep all your clients and everything in a database? Awesome.
Yes.
We also have a CRM that we, allow our realtors to use. I'll also show you that. It does offer drip campaigns. You can generate flyers, open house flyers, down payment assistant flyers, whatever you need. So if you guys want access to that as well, it's free of charge. So if it's something that can help you out, you can definitely feel free to go on there and just use whatever you want to use.
In the beginning, I saw that you had a home ready and a home possible products. What are those?
This is just the Fannie Mae product, the 3% down. So, but home ready and home possible, they have better pricing, right? They, however, do have income limits. Your income typically needs to be 55,000 and under. Anyone that's on the loan, their income counts. But even though these are conventional loans, they have better interest rates. So anyone that's, making 50 grand or so, they're buying it as a primary, more than likely, I'm going to put them in home ready, home possible. Because it's conventional, it is still best that you have at least 700 FICO scores. Anything below 700, you're better off going FHA. FHA will give you better loan terms, right? Lower interest rate, lower PMI. But home ready, home possible is 3% down. 3% down, whereas FHA is 3.5%. But FHA has the mandatory PMI. It doesn't come off until you refi in the future, and they also require that upfront PMI, the 1.75%. So that's what home ready, home possible is.
So home ready still has a PMI?
If you put less than 20% down, yes, you will still have PMI. Same thing with home. Yeah.
Right.
There are, however, there's upfront PMI options. You pay it upfront, then you won't have the monthly PMI.
Okay.
Yeah. Reverse mortgage, home equity line of credit. We offer those as well, like HELOCs. If you have a borrower that wants to buy a home, but they have a super low interest rate. So let's just say they already refi, they're locked in at 2.5, but yet they want to buy another house, and their house that they live in now has tons of equity. What we can do is we can offer them a home equity line of credit. So it's a second loan. So you're not redoing the whole loan, getting a 6% interest rate. Maybe you only need a line of credit for 30 grand. Doesn't make sense to refinance the whole loan. Let's just say they owe, 200 grand left. Doesn't make sense to refi for 230 at 6% when they're at 2.5. So we can offer them a home equity line of credit. They take 50 grand out, and now they got the money down to buy this new home that they want to buy. So yeah, home equity line of credit, pretty easy to do. It's kind of similar to a regular mortgage though. We're still going to look at W-2s we're still going to look at pay stubs, right? They still have to qualify. They have to have a work history. They got to be working. So, but we've been doing a lot of home equity lines of credit just because of that. No one wants to touch the first mortgage right now because they have such a low interest rate. They need the money. They want the money. They want the money from their equity from the house. So they're pulling us. It's like a credit card on your house, which is nice, right? You only pay interest on what you use. So say you took out 100 grand, you don't have to pay interest on this 100 grand unless you use 100 grand. Let's just say you got 100 grand, you only took out 10 grand. You're only paying interest on this $10,000 that you use. And as soon as you pay it off, now you don't have any more interest. It's really like a credit card on your house.
But is it a revolving line? Like if I only use 10 of the 100, is that other 90 still readily available to me?
Yes.
Once I pay off the 10, it's not like I paid off the 10 and now I have to reapply, right?
Exactly. Yep. So if you're going to do a HELOC, you might as well do as much as you want, because if you want a bigger line of credit later, you probably have to reapply. And typically lines of credit are interest only payments. So it's kind of good for cash flow, right? If you're taking a HELOC to buy this home right out cash, you're only paying interest only on it. They do have options where fixed rate options. They do have options for principal and interest. It's up to you, right? You got to be disciplined to pay off this home equity line of credit if you're doing interest only. Because if you just pay the minimum, you're never going to pay down the balance because it's interest only payments typically. But we also have a few niche products, like I said. So have you guys heard of DSCR loans, like investor cash flow loans, investor solutions by chance? If you haven't, what we use for qualifying purpose is the rental income. So we don't look at tax returns. We don't look at, there's no tax returns, there's no W-2s, etc. All we use is the proposed rental income for qualifying purposes. Generally, if your proposed rental income covers the mortgage payment, then they're going to qualify. Typically, you need 20% down on these type of loans. You can also close in an LLC. And even if the proposed rent payment comes in slightly lower than the mortgage payment, you should still be able to close. They might have to take a higher hit on the rate or something like that. And typically, these type of loans will have a higher interest rate. It could be anywhere from like 8 to 11%, just depending on how much they're putting down, the type of property it is, etc. So investor cash flow. We also have expanded access programs such as bank statement loans. These are great for people that's self-employed, 1099 employees, even like for realtors, right? Realtors, a lot of times, I guess anyone that's self-employed. When you're self-employed, you do write off a bunch of deductions. So right now it's tax season. It's a good time to maybe get in touch with your borrowers, anybody that's self-employed, kind of give them a heads up, because bank statement loans are great, but they do typically require a slightly higher down payment, 10% versus your normal 3 to 5% down if you're purchasing it as a primary residence, right? If you can catch them right now, and if I'm able to, or a lender, any lender you're working with, if they're able to review your tax returns first, we can then work with you, let you know how much your 2022 tax returns will need to look like in order for you to qualify for a regular conventional conforming loan, right? So sometimes we can go with 1 year tax returns. Typically you need 2 years tax returns and we will average out the income, right? However, if a borrower has great credit, a buyer, right? If they have great credit, we run it through DU, desktop underwriter. If DU spits out and says we only need 1 year taxes, great, right? They just got to file their 2022 taxes in a way that's going to work for the loan, and we're going to be good with that. But however, if it tells us 2 years tax returns, we have to average with 2021. So if 2021 they only showed 30 grand in income, net income, we can let you know what 2022s need to look like in order to qualify for, let's just say, this $350,000 home, right? And this is something that they should look at and make sure it works for the loan that they're trying to buy before they actually file. Because once they file, it's very hard to go back and amend the numbers. Because at that point, if you already have a loan application started, the underwriter is going to be like, well, you're trying to manipulate your income at this point, right? So right now it's great. Tax season is about to start. If you have any buyers that are self-employed, 1099, it's a good time to possibly just reach out. If they're looking to purchase a home, we can work together and work up some preliminary numbers so they can get with the CPA and see what that would look like in regards to their tax liabilities. So worst case scenario, they don't want to pay Uncle Sam or it's just too much. We can still do the bank statement loans. Typically 12 to 24 months of bank statements is what we look at. We're only looking at the deposits. We're not looking at your W-2s. We're not looking at tax returns, just looking at your deposits. We go down as low as 620. even though the minimum is 10% down at 620, it will require a higher down payment. Typically what I see, you need at least a 680 FICO score for 10% down. And if the bank statement route is too much, they want to go with less documentation, we do have a P&L option. A license, CPA will have to create this P&L, and we'll use that instead for qualifying purposes. And both this investor and bank statement loan, you can close it in an LLC. So plenty of options. You guys have any questions on either of these programs? We do offer foreign national loans. So no income, no job, no credit, it's fine. Even condo tells, PUD tells, it's okay. Foreign national loans, typically 20 to 30% down. There are certain countries where we don't loan to. I don't remember exactly what, but for the most part, like they're all available.
I'm sorry, I know a condo tell. What's a PUD tell? What is that?
I think if it's in the PUD, like certain communities are in a PUD.
What is a PUD? I'm not understanding that.
Planned unit developments.
What is it called?
Like a
planned unit development. Oh,
yeah, that's what PUD stands for.
Okay. I wasn't making
I
that.
don't think there's too many of those here that not that I'm aware of.
Okay.
But it's just something we are.
I'm sorry, could you describe the PUD again?
Yeah. PUD stands for planned unit developments.
Oh.
Most HOAs, like, they're considered PUDs, but 5 to 24 unit properties, it's available. Apartment, student housing, all of that is available. Construction to perm, I'm sure you guys probably have heard of this one. You can include the lot or the land. I know Tampa's growing a lot. There's a lot of investors that want to buy, that want to build. So they can actually purchase the land, and include it with this loan, which is nice. With the construction to perm one-time close, it's primary residence only, but we do have construction to perm for investment properties as well. Go ahead, Kyle.
Now that's actually a great product because you're saying that including the land, they only have to come up with up to 5% down, whereas most other lenders are requiring 30% down for the land part only.
Right. The thing is, your contract, your land contract has to be long enough, right? Because they're not going to disperse the loan until your loan is approved, right? And so typically on a construction or perm loan, you got to have your contractor, right? Have your contractor locked in. You got to have your bids, your estimates. These are the things that we're going to need to send the loan in for approval, for the construction or perm. Until everything has ran through its motions, they're not going to disperse the loan. And if the loan is not approved, it's not dispersed, the person you're buying your lot from will not get their money. So you just want to make sure that when you're writing this contract up for this lot, you need to make sure it's long enough so that we can get this loan approved. And what takes the longest is the bids. You got to make sure you have your contractor bids ready to go. Because typically these contractors, they take like 2 to 3 weeks sometimes. In 2 to 3 weeks, your contract's about to end on your lot, right? And we haven't even started the loan process because we're still waiting on these bids estimates.
So how long would you say is a fair enough amount of time if we wanted to do something like this and we want to write the contract? What are we saying? Is it 3 months, 2 months? What are we saying that's reasonable?
No, I think you would have to know your contractor and see how long he's going to take, let him know the sense of urgency, he or she. But I would say minimum 45 days, but I would say 45 to 60, right? Just in case your contractor takes like 2 weeks just to give you a bid. Because we need some type of bid because we need to know how much this is going to cost to build, right? The lot plus the cost will be your loan amount.
Right.
So if we don't know that, we don't have nothing to work off to go through underwriting.
And the challenge then becomes, right? So now if I'm the buyer's agent, right? And I'm helping them to do this construction to perm, I have to tell this person that is trying to sell their land, hey, I want to do a contract with you to buy, but I won't have a solid pre-approval. I can't confirm financing for up to 60 days. And that's kind of outside of the terms of the new contract, right? Like the new contract gives you a set period of time for when they have to have a bank approval. Mm-hmm. So how do we finagle that? How do we manage that?
I would say if that's the case, they can try to get just a lot loan. We don't offer those, but I know there are some places that do. Just get the lot loan, right? So you can secure the land. And then afterwards, we start the loan process and we pay off that lot loan, that lot loan.
Oh, okay. So that's the workaround. Okay. I see. Okay.
Mm-hmm. But if they don't have the funds, right, to purchase the lot loan, like the 20, 30% down that they require, that might be an issue. At that point, they might just, as long as you have the bid, if you have the bid, we should be good to go. So I would say number one, if someone is interested in doing construction or perm, they should have their contractor. They should have their contractor in mind. Contractor should know like, okay, what to do, get the plans ready, get them estimate. If they have the estimates, I think you should be able to make the timeline.
So what I'm hearing in my brain is get everything you need before you even make the offer to buy the lot, right? So that you already have your contractor, you have your permits, you have everything and all the things they're going to need. And the last piece of this is, okay, now let's put it in an offer to buy the lot.
Right.
Because we got everything else.
Because I guess if I was the investor, I'm looking to purchase a lot to build whatever I'm looking to build on it. I should have an idea of what I want to build. I should have an idea how much it should cost, right? And then you go find the lot. The lot is just a piece of land, as long as the zoning is right, you can put this, put your plans on this piece of lot and you're good to go. So yeah, I would say half the time people are looking, they don't even have their contractor yet. They don't have a contractor in mind. They have no idea what they want to build. It's like, we're kind of working backwards.
They just know they want land and they want to build. That's where they are.
Right. Right. Yeah.
Okay, that's cool.
But yeah, if it's primary residence, 0 to 5% down, because VA is 0% down. FHA, we can do 3.5%, conventional 5%. If it's an investment property though, it is going to be, more money down. But if it's primary, they're going to live in it, then that's fine.
So I have a question. I know last year when we had issues with like delays and stuff, that this contraction to perm loan wasn't working out as well because everything needs to happen within 12 months. Is that my understanding? Like if the build is going to run longer and go to 18 months and they can't use the loan, that's still?
Yeah, typically, they want it done within 12. I have heard of some exceptions, right? There might be some pricing hits or something like that. But if we know upfront that it's going to take, I guess sometimes we won't, right? Just because things happen.
And I'm sorry to hold it. I didn't mean to hold us at that particular point, but I also want to hear the fix and flip up to 85% LTV. What is that?
Yeah, 85% value, so 15% down. Fix and flip loans, 15% down. But there's conforming. If you're buying as a primary, well, technically conventional, they'll even offer investment properties. But if you do the conforming route as in like full documentation type loan, right? Stuff like that. You can do a Fannie Mae home style loan, kind of like a FHA 203K, right? You can still do it now, get better loan terms, but it's got to be a primary. But conventional does offer investment as well. Is
that a good option? Like say they're buying a HUD house, they bid and get a house off of the HUD list. Do you want to go this? Is that a way to go to? Because those houses need work right off the bat, but most of those people tend to live.
Yeah, it would be a 203K loan. Same thing. You need to get your estimates. Let's just say the HUD home is $100,000. We need to put 50 grand of work in there. As a realtor, you just got to make sure that the house will appraise for 150. If it comes in lower, it'll be an issue, right? So the bid is 50. The house HUD home is 100. Right? We're at 150. It needs to appraise at 150 or higher. If it doesn't come in where it needs to be, then there'll be issues on the loan. But yeah, you can definitely do that. So 203K. Yeah, I know like right now homes are still kind of expensive, and like if the borrower can't or the buyer can't find anything, they can look for homes that need a little bit of work, and we can go to 203K route, and they can just rehab it, to their liking, cosmetic work. But this type of fix and flip product, you don't need anything. Right.
That was interesting. Like you really mean what you guys are really looking for is light rehab, right? Like you said, cosmetic stuff. You're not looking for like a full gut rehab kind of deal.
You can. If it's like primary residence, there are certain things that they won't do, right? Like I think FHA doesn't like structural stuff, right? Like no pools, but conventional will. But what I have on my PowerPoint, the fix and flip for 85%, that you can do a full gut job, like full roof, tear down a wall, open up a wall, whatever, right? 15% down. And then bridge financing, right? So someone needs to buy and sell, but they don't want to sell their home first because they have nowhere to go. Sometimes, elderly people, they don't want to, do all that, move twice, etc. We can do bridge financing, get them the loan so they can buy the investment property, and afterwards they just sell it. It's fine. Essentially, we're kind of pulling cash out of their current home for them. So we also offer bridge loans. If you guys are looking to, or even if your buyers if they're looking to purchase a primary residence and they have great credit, there is this stated income no document program, 20% down, 12 months reserves. When I talk about reserves, I'm talking about PITIA, right? Principal, interest, taxes, insurance, and HOA, if any. 12 months of the PITIA, and you just need the money to close, and you're in the house. So no income documentation, because typically stated income income loans is typically for investment properties, but this one is actually eligible for primary residence. So it's actually huge. We did one recently for a travel nurse. She had tons of money in the bank, great credit, just didn't show the money and, the income on tax returns. But we got her into that program, primary residence. So she was still able to get a pretty good rate. I think she closed around like 8s or so, but 20% down, no income, no bank statements. She didn't have to provide 12 to 24 months bank statements. She just needed to provide the 2 months bank statements to show proof that she had the money to close. And that's really all we needed. Money to close, 12-month reserves, appraisal came in, and you're in the house.
Okay, so I have a client who owns like 20 properties outright. There's no mortgages on any of them. He's trying to find a way to leverage that without having to take out like a loan or a line of credit on each one of them. Is there any way that he can like do like a blanket portfolio line of credit or something that he has access to money whenever he wants to?
I have heard of it, but I have one investor that will do it, but it's got to be like over $1 million. So I'm not sure.
In collateral or property values or $1 million line of credit?
I believe he was mentioning collateral. Yeah.
Okay. I think with 20 properties, you should definitely have
Right.
that.
I would think so. Yeah. Yeah. I can definitely confirm though. Do you know how much he's looking to pull out? Because a lot of times with these type of loans, they have minimum loan amounts, typically like 100,000 or so.
No, I don't know how much. I know he has a construction business, so he's looking to liquid for that.
Yeah. Okay.
Can I ask another question?
Mm-hmm.
So what if I want to use the primary, I want to go as a primary residence, but I want it to be a multifamily so that I can get rent. Is that going to be can you consider that still your primary, or are you now counting it as an investment property?
I believe you can, as long as you're living in one of the units. Are we talking about one of these niche products, or are we talking about conforming?
Yes. I mean, I like the niche products for sure, right? But with the idea that, let's just say, my goal personally is to have a 4-play, right? I want a 4-unit, live in 1, rent 3, move out, but the obstacle is I'm a 1099, right?
Right.
You can't qualify FHA with 1099, right? Which is the most ideal program to get in. But then since I can't get the FHA, I'm trying to look for other ways that work for a realtor on 1099. And of course, without having shown every single penny I've ever made. Right. By the way, I pay my taxes in case the IRS has. So, but you get my point, right? Like, how do you structure it so that a guy like myself can get in that, have great credit, some cash, but like I'm trying to figure out what's my best way to get what I actually want.
So kind of like what I talked about earlier, because it's tax season, like if you can qualify for FHA is the only program that will allow you to buy it as a primary at 3.5% down, right? 3.5% down. You can do multi-unit, but
you have to have a W-2 for 2 years. We don't get W-2.
Not W-2. You can be self-employed for 2 years. As long as you've been self-employed for 2 years, if your taxes look right, and I can work with you on that. We don't have to show a bunch of income, just show enough for you to qualify, because you can use the rental income for qualifying purposes, right? If we can show the other 3 units, being rented out, and we have rental income coming in, that will offset your mortgage payment to qualify. So we might not even have to show too much money where you have to pay a bunch of taxes back. So we can look at it that way. And if that way doesn't work, then yes, we can look at the other options, these niche products, and you can see what the difference is and make your decision based on that. But as long as you're living in one of the units, it should still be considered primary residence. I just might have to confirm with them about the down payment. I know for single family homes, it's 20% down. For multi-unit, I don't know if the down payment changes or not. That's something I have to double check and confirm for the niche.
That's a big number at 20% down on a multi-unit property. So hopefully it's a little more flexible.
Yeah, so that's the stated income no doc program. Yeah, stated income, no docs at all. But if you have the bank statements to show, we'll just 12 months bank statements. They'll average out the income, and that is just 10% down for single family home. But for 2 units, 4 units, I'll have to double check on the down payment for that.
Is the interest rate on that one still around 8%, like the other one, the DSCR?
The bank statement?
Yeah, the bank statement.
Yeah, it's still about 8. Correct. Yeah. Right now on a regular conforming loan, like conventional, people with great credit, they're looking at high 5s to low 6s. So, bank statement's about like a percentage or 2 higher.
How do you prevent the way you described it was we could go the first way and see if we qualify, but then if it didn't qualify, you can always go bank statement. Haven't you already shot your shot in front of the underwriter? Like, how do you now we're going to present something else. The underwriter has already said no, right? So how do you get around that?
Well, so I wouldn't send the loan to underwriting. I would review, like as a loan officer, right? I'm going to review the file for you when I'm doing my pre-approval, right?
Gotcha.
And then we'll work together that way. And then I'll present the options to them like, hey, if you need to probably show 80 grand, right? $80,000 in income in order for you to qualify for this $300,000 home. 80,000, they probably will end up owing some money to the IRS, right? And if that's not something they're willing to do or want to do, then I'll give them the other option, which is the bank statement, right? Higher interest rate, higher down payment. They pick their poison at that point. I gave them both options. You can either pay the taxes and do a regular conforming loan, get an interest rate in the 6, right? 3 to 5% down, or you can go 10%, don't pay Uncle Sam, but you're getting a higher interest rate as well. So, we can just give them the option essentially prior to, getting on the contract. This is just for the pre-approval purpose. Any other questions besides on these two programs? Cool. All right.
I'm sorry. Which one of these did you recommend for realtors again? Was best for realtors?
I would say the bank statement one because it's a little bit more documentation compared to the investor cash flow, but it is a better interest rate, lower down payment.
And why is this, just out of curiosity, why are these options better as a realtor rather than hard money? Why not just go hard money, get the house, right? And then come back to you guys and refinance. I already have.
So with hard money, typically it's like 1 year, 2 year term, right? These are still 30-year fixed rates, right? If for some reason, I don't know what happens, like you just don't qualify or something didn't happen like you thought it would. Now you're not scrambling because you have to pay this balloon payment off, right? Like typically the hard money loans, higher interest rate, you're paying more points, maybe 2, 3, 4 discount points on those type of loans. And the term of the loan is pretty short, typically 1 to 2 years, maybe 3 years, right? So with these options, we have fixed rate options, we have adjustable rate mortgages. So you get a little bit more time with it. And I know last week, I think Ann was telling me you guys had already gone over the 2-1 buy downs. I was going to go over that today, but since you guys already went over it, I'm not really going to go over it too much. But that 2-1 buy down is a great option right now because if you can get the seller concessions, you can buy down the rate the first 2 years and then refinance hopefully before the 3rd year comes.